Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. Housing affordability and the housing crisis, and now this condo crisis that people are talking about, condo crash, etc., are all one of the topics that I think all of us have been talking about around the dinner table or around the barbecues or things like that of late. And I ran into a bunch of posts by a really interesting gentleman. Matthew Young is his name. He's president and CEO at Republic Developments, and he's part of a group that have been arguing about the taxes, development fees, and other things that that governments have been ladling on top of the development industry, specifically a Ontario Developer Coalition that has asked governments for tax breaks to pass on. And so I thought I'd reach out to him. Matthew Young, welcome to the show.
Thank you for having me. I appreciate it.
So tell me, what do you think the challenge is with development fees and other taxes that governments have currently put on the housing business?
Well, the challenge is every level of government is saying, and I think the public as well is saying, that housing is too expensive. It needs to be more affordable. And yet they say that on one hand, and then they've consistently raised the taxes over the last 15 years on the cost of actually building housing. And so, for a long time, we had interest rates dropping. And so as interest rates were dropping and values were going up, governments were taking a larger and larger piece of the pie. And then once interest rates started going up again, the system broke. And so we took a step back with our team, started looking at why we couldn't bring costs down or bring pricing down for buyers to a point that would be affordable. And we looked at every line item in our pro forma, and taxes was the thing that has gone up more than anything else in the last 15 years. And so we said, enough is enough. We need to have a conversation about this. And then we launched this campaign.
And the campaign is the Coalition Against New Home Taxes, Kent?
Correct, yeah.
And you are there with several different other companies?
Yeah, when we initially launched the campaign, there was 19 of us who signed on to the pledge. And just for clarity, the pledge is for every dollar of tax cut by any level of government, this group of home builders is pledging to cut their pricing dollar for dollar, plus any interest savings that would be achieved from the reduction of those taxes. So the goal here is to send the signal to the public that nobody is looking for a bailout. Nobody is looking to make more money. We are all just trying to build housing, which we desperately need. And we want to make sure the pricing is at a price point that's affordable for regular people. And so our commitment, if the government's willing to step up, is we're going to do our part and lower pricing, but you have to do your part and you have to lower the taxes.
Give us a sense, if you could, of how substantial the taxes are that you pay.
So when we were doing the math on it, we looked at a typical Toronto condo, which is the product that we sell. And taxes today on an average Toronto condo are about $240,000 per home. And that represents roughly 30%, just shy of 30% of the total cost of that home.
Hold it. Taxes are $240,000?
Correct. Yep.
What is that made up of?
More, by the way, it's more for 2 bedrooms, and it's more for single family homes and ground related dwellings. So that is like an average condo.
Give me a sense of some of the taxes, if you could.
Okay, so there's a series of taxes, but you have HST as an example, is a big tax. That's a tax that we price into our units. So when we sell a unit, it's inclusive of HST. The purchaser is directly paying that tax. You have development charges are a significant tax. They've been going up in Toronto alone in the last 90 days. They've gone up 42% in a housing crisis, if you can believe it. Then you have in Toronto a double land transfer tax. So the province charges a land transfer tax, but the municipality also charges a land transfer tax, which has also increased for housing that's above a certain price value. So there's that. You have education levies, you have parkland levies, you've got community benefits charges, you've got application fees, building permit fees. You've got all sorts of, we're calling it all under taxes, but it's taxes and user fees and things of that nature. And then you also have interest on those taxes. So development charges, parkland, community benefits charges, education levies, a lot of these taxes we pay upfront when we pull our building permit, which means I have to finance that with a bank and I have to pay interest on those taxes over the 3+ years of construction. So when you add that in, that's a significant number as well. And so collectively, and we actually have it in our letter. So if you go to the back of the letter, there's a backgrounder, and it's actually got a table of a typical bog standard condo project in Toronto, and it breaks down the taxes dollar for dollar and as a percentage, so you can see how they all add up.
Yeah, no, it was astounding when I read this. So on a total project cost for one bedroom unit of $822,000, which you're probably selling for what, 900,000 or $1 million. The HST is $80,000. The development charges are $77,000. The parks levy is $10,000. The property taxes, $5,000. The community benefits charge, $4,000. The education levy, $4,000. The permits and fees, $3,000. The land transfer tax, almost $3,000. The interest carry on those costs, $26,000. The purchaser land transfer tax, $28,000, for a total of $240,000. 144 to the municipal government, 65 to the provincial government, 31 to the federal government. It's astounding.
Yeah, it's unbelievable. And, another good way to look at this is, what were these taxes in 2009? 2009 is when I started in the business. And, I dusted off an old pro forma from way back then. And the taxes were roughly 12% of the cost of a home, or $36,000, a little over $36,000. So as a percentage, the taxes have gone up from 12% to roughly 30%. But in a total dollar per unit basis, it's gone up almost 600%, because the pricing of the units has actually tripled in that period of time. So you have to start wondering, if we were able to pay for everything we needed to pay for 15 years ago, why is every municipality concerned and waving a flag saying they don't have enough money to pay for the things they need to pay for today? Inflation has been a lot, I agree, but it's not gone up that much. And so where is the money actually going? And so we're trying to just, ring the alarm bells on this, because it's a major issue. And, when it's frustrating for me, because as a home builder, I see a lot of people online and hear a lot of people who kind of, cringe at the thought of, home builders making money. And they don't realize that governments are actually making double what the entire investor group in a project makes, not the home builder. The home builder makes a portion of that, but you raise capital, and that capital gets a return on their money too. And so the home builder might only get 3 to 4% of the profit on a project entirely. The government gets 30%. So how is that fair?
The government's going to get more, because if the developer makes any profit, then the government's going to get income tax on that profit too.
They tax a chunk of that as well. So I think the system just needs a holistic revisit. It doesn't work today. And given that we are in a housing crisis where we're not building enough housing, supply is a major problem. The only way to create new supply is to build new housing. And the only way to build new housing is to pre-sell a lot of that housing. And it needs to be at a price point that people can afford. Otherwise, they're not going to buy. And that's where we're at today.
We're going to take a break for some messages and be back with Matthew Young just in 2 minutes on the issue of our government's just raising too much tax revenue on new housing. Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Matthew Young. He's the president and CEO at Republic Developments, and he is part of an organization that's just gotten together recently called the Coalition Against New Home Taxes, CANT, C-A-N-T for short. And it's a group of Ontario developers that have signed a pledge to cut the prices of the homes they build, putting their money where their mouth is, if municipal, provincial, and federal governments reduce the taxation on new homes. And he's arguing, based on a really interesting description of all the different taxes that are paid, that the typical one-bedroom condo has $240,000 worth of taxes leveled on it. It's an amazing amount, and that 29.2%, so almost 30% of the cost of building a one-bedroom condo would go to taxes. Matt, would it be the same for single-family homes or for townhouses, or is condos
Absolutely.
where it's the worst?
No, it's bad for those as well. In fact, single-family homes and low-rise housing have higher development charges than multifamily units do. So this really applies across the board. All housing is overtaxed right now. And so, we've already seen some progress from governments on rental housing. So the province of Ontario and the federal government have reduced HST, or actually removed HST, I should say, on rental housing. And so we're arguing that they should follow that same lead on rental housing, but do it for all housing, because housing that gets built today, multifamily housing, this serves as a new home for someone. And when they buy that new home, they sell their old home. And so it trickles down all the way through the housing stock. And so any new housing we're building is good. And so we need to tax it in a way that makes it affordable for people.
I think you said that development charges in the city of Toronto went up by, was it 42% you said in the last month?
In the last 3 months or so, starting in
What's
May
the,
and then again in June.
what's the justification for that? Like, I can't believe that infrastructure that you need to put into the ground to justify new development actually went up by 42%. What's the justification for a 42% increase?
Yeah, to be honest, I'm not sure there is a justification for it. You'd have to ask the city of Toronto why they did that. As a province, sort of, I forget which bill it was. If it was Bill 23 or I forget the number, but in any event, it allowed the province to raise development charges, and so they've done that. And there really is no justification for it. The other frustrating thing about development charges, and I always talk about this, and it's a nuanced argument, but when I build a new community and I need to upgrade my sewers to accommodate that new growth, I pay for that already out of pocket. That's not paid for by development charges. That's paid out of my own pocket as part of my construction costs. So I've now enabled that project to be built, and then I still pay the development charges on top. So it's actually a double dip. I've got a project I'm building in Scarborough. We're not under construction yet. It's a master plan community. It's got over 7,000 units, a number of buildings, parks, all of it. And we have to build new roads. We have to upgrade the sewers. We have to build new sewers into those new roads. There's a whole bunch of infrastructure we're building. We're building a new GO train stop. All of these things I'm paying for out of pocket. And then on top of that, I'm going to pay upwards of $450 to $500 million in development charges. So I'm not sure how that really makes sense if, on the one hand, you're telling builders that they have to pay for all those costs on their individual projects on a case-by-case basis, and then on the other side, you still demand the full development charge. So you'd have to talk to the city about why they've justified raising development charges, but I don't understand it.
I think it was a year, maybe a year and a half ago. Maybe it was 2 years ago, actually, the provincial government came out with their places to grow. No, it wasn't. It was their home ownership plan that had 57 recommendations on how they were going to bring down the cost of home ownership and get more homes built. And one of them was eliminating development fees. And they actually put forward a proposal to eliminate development fees at one point in time. And the municipalities, were their arms were up. They were like, there was a fury of opposition saying that the municipal budgets would be destroyed if the province eliminated development fees. Why didn't that stand? Why didn't it stay?
I think what you're talking about was there was a housing affordability task force.
That was it. I apologize. Yes.
And they recommended, I forget how many recommendations, but I think it was like 40 something recommendations.
57 was my rec.
57. You might be right. You might be right. And my understanding is very few of those have actually been implemented.
Like 6.
Yeah, and so there's a lot of talk online on Twitter or on X of housing advocates who are saying, like, you have these incredible recommendations put in front of you that industry and a whole bunch of really smart minds have come together to make for you, and you haven't implemented them. Why? And I don't know if it's been publicly addressed yet. I'm not sure why, but that's an immediate place that the provincial government anyway should be looking at. So maybe they have their reasons. Again, you'd have to ask them. But it seems like when I read that, and would have been 2-3 years ago now when those were initially recommended, a lot of them made a ton of sense to me. There didn't seem like a lot of negative things in there that would have blowback or cause problems. A lot of it made sense, and I think for political reasons they maybe haven't implemented it. I think municipalities, particularly like anyone, they're concerned about the revenues that come in, and they want, they're in the business of maintaining status quo. And sometimes when you go through a housing crisis like we're going through, you have to make difficult choices. And I think it's very hard for bureaucrats and very hard for politicians to sometimes make those difficult choices. So I get it. I totally understand that there's political challenges with doing things. But at the end of the day, you're public servants, and your job is to try and do what's right for the public, not always what they want, but what is the right thing to do. And, we need immigration. We are housing formations are down in Canada. People are getting married later, opting to not have kids. A lot of these things are really negative externalities for the country. We need to change that. And the way you change that is making housing more affordable, because nobody wants to plant roots when they feel insecure about their housing situation. And that's really what's happening to young people across the country. So you have to sometimes make a difficult choice. And what's more important?
There were several politicians that, particularly politicians in municipal governments, that suggested that when the argument was to eliminate development charges, that it would be a windfall profit to developers, that they wouldn't use that money to reduce prices. It would be just, extra profit for these rich developers. What would your retort to that be?
I would say you don't have to worry about that, because we've now committed to lowering our prices, and we're open to any accountability measures you have or you want to implement to ensure that those savings get passed on. So I'd say that's a nonsense argument today. So come up with a better excuse.
We're going to take a break for some messages and come back with Matthew Young in just 2 minutes. Stay with us, everyone, talking about housing affordability and the role of development charges, taxes, and government intervention in the process. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Matthew Young. He is the president and CEO at Republic Developments. He's a builder in the Greater Toronto Area. What do you build, Matthew? It's primarily condos?
Yeah, we mostly build condos. We are looking at purpose-built rental, potentially repurposing some of our projects that were planned to be condos as purpose-built rental. But pretty much everything is high-rise multifamily.
Some people have suggested that the red tape and regulations in getting approval, the time to get approvals, is equally problematic for developers. So what do you say to that?
That has definitely been an issue. There's no question. I don't know if I would say it's equally problematic. Like if you actually did the math, it certainly has a massive impact, but I don't think it's a 30% impact on the economics. So, but I will say that governments have actually made strides, to give credit where credit's due. They've made strides in trying to shrink timelines down. It's not perfect. We're actually going to be starting a new project in the coming months that is subject to these new policies, and it's looking like in the case of Toronto that we're going to be able to move through the process at about half the time that we were before. So I think that's really encouraging to see. But at the end of the day, you can only price a home based on the cost it is for you to build plus an appropriate margin to build it for. So if you can't lower the input costs, you really can't bring the price down all that much. Time does play a role. And obviously, the shorter my time frame, the less profit needs to be made. And, maybe you can shrink the margins a little bit as well, but it's not enough to move the needle 30%.
CMHC, the provincial government, et cetera, have said that we need to build something like 1.5 to 1.8 million homes over the course of the next 6-7 years by the end of the decade to restore any level of affordability in the Greater Toronto Area or Southern Ontario marketplace. And yet at the same time, I'm told that 80 condo projects have been put on hold this year, that we've got a 28-month inventory of unsold condos that were pre-construction condos, and that this year is going to be the year of highest delivery of condominiums, and a lot of them are going to go either unsold or be it Simon sales, or the purchasers aren't going to show up with the cash, etc. What do you think is going to happen in the marketplace?
It's a very precarious time, right? Because on one hand, you've got record immigration. you need more housing for people. And so we need to maintain the same number of starts every year and ideally be growing those starts every year. We're going to continue to have a lot of completions because there's, housing that was, started construction 3 years ago is going to be completed. And so we'll see high completions for a little while, but the starts are falling off a cliff. And so where we're really going to see the pain is 2 to 3 years from now, when the homes that were supposed to start construction today, but they don't because they couldn't get their pre-sales, they couldn't get their financing. In 3 years from now, those aren't going to exist. And you never get those homes back because we do have a capacity for how much we can build. So those homes never get rebuilt. You just have to, they will eventually get built, but then other homes are going to get pushed back and pushed back. And so I think it's going to create a bigger problem in the future. Not just a shortage of housing, but then the affordability issue is going to remain. And it trickles into the rental market as well, because if there isn't enough housing on the ownership side, there's not going to be enough housing on the rental side, which means rents are going to continue to go up. So this is a problem the government needs to be paying acute attention to. It's not something that you can just dust under the rug and come back to it a year from now or 2 years from now. It's going to have fairly significant impacts, both in terms of job losses, lost revenue. I mean, a lot of these taxes governments aren't going to get anyway because the starts aren't happening. So you're going to lose revenue, you're going to lose jobs, you're going to see more and more Canadians. Granted, it's a small number today, but you're going to see more and more Canadians looking for other places to live, whether it's outside of Canada or at least leaving big cities and going to smaller cities. That sounds like it's not so bad in practice, but those smaller cities are then going to see housing bubbles because you're going to have a whole bunch of people from Toronto and Vancouver moving to them, driving the prices up in those markets. So it creates a whole bunch of problems across the board. And ultimately, it's solved by just building more housing. So we need to find a way to do that. And we think bringing pricing down and making it affordable for people is the easiest and path of least resistance to do that.
I sat down with a couple of people in their 30s, I guess 2 weeks ago, and they were mad. They were looking at leaving Toronto and going to either Ottawa or Calgary or other markets where it was more affordable. And they were very resentful that, they said they couldn't afford to start a family because the only thing they could afford in the Toronto marketplace was a 1 or 2 bedroom condo that was, 500 or 600 square feet. It wasn't big enough to really live in. Certainly not the single family home that they dreamt of owning in suburbia. They were talking about, they went to Milton, they went to Georgetown, they went, to Barrie, and they still couldn't find affordable homes. So that, they would be commuting an hour into the city. What are we creating if we don't solve this problem?
I think it's a huge amount of resentment. And as you pointed out, you're already seeing that resentment today. I mean, I talk to young people all the time, and sometimes they're not even young. Sometimes they're people in their mid to late 30s who are still renting. So this is something that's affecting everybody. Even if you have a good paying job, you went to university, you worked hard, it just feels like pricing is moving at a pace that's quicker than you can, grow your means. And so I think when that happens, people start to give up. And when they give up, they stop trying and they stop caring and they stop investing in, the country, trying to build a family or build a business or anything like that. And we're seeing that now. We are one of the most unproductive nations in the world, or at least in the G8, because, we've been so focused on housing and people are afraid to take risks here because they feel like it's not worth it. They're taxed way too high and it doesn't make any sense to take the risk and try and build things here. And so when you get this level of apathy where people just don't care anymore, I think it's a really bad sign for Canada, because we need to be a country that's building things. We need to be an innovator. We need to be attracting the best and brightest talent from around the world to come here. And you're not going to do that if there's more attractive places to go.
Matthew, if you were Minister of Housing, what would you do?
First thing I would do is immediately cut taxes on the building of housing. Second thing I would do is try and continue to speed up approvals and enable like any land that's available to build housing on that the government has access to or controls. I'd be trying to open that up as quickly as humanly possible to give more opportunities. And by the way, it doesn't even have to be for a profit for the government. If you're, what you can be looking for is affordability or other community benefits in lieu of land value. So this excess land you're sitting on, that you're not doing anything with, it becomes productive land. Enable it to be built. You know, cheaper financing, like, you know, we're seeing that in rental where you can get some CMHC financing. There's a lot of hoops you got to jump through. It's not super easy. You know, if there's ways to improve those programs, I think there's opportunity there. Look, ultimately, I'm not a politician, and so I don't know, I don't have all the answers, but my kind of builder brain says find ways to remove the cost of building housing, find ways to get out of the way so it can be built quicker, you know, and then let the industry do what it's meant to do. And everybody wants to build, but you can only build if it makes sense. So I would just try and make it make more sense.
Matthew Young, President and CEO at Republic Developments. Thanks so much for joining us tonight and telling us a little about your organization that's trying to get taxes reduced on housing. And I think, you know, if nothing else, what you've done by laying out for everyone the $240,000 per unit of taxes, development charges and other fees, and HST on every single one-bedroom condominium built is pretty stark and shocking. And so I hope that the public pays attention. I hope the politicians pay attention to your argument. Thank you so much for joining us.
Thank you so much, Brian. I appreciate it. It was my pleasure.
I'm going to take a break for some messages and come back with my own comments on this topic in just 2 minutes. Thanks, Matt. Appreciate it.